Welcome to The Explainer. All right, today we're jumping into a huge topic, personal finance. And we're going to break down a strategy that's so simple, but so powerful it can literally change how you see your financial future. So what if you could build some serious wealth with just one super simple strategy? Well, that's exactly what we're digging into today. We're looking at J.L. Collins' book, The Simple Path to Wealth. And the coolest part? This whole thing wasn't written for Wall Street. It actually started as a bunch of letters from a dad to his daughter, just trying to make sense of all the financial noise out there. Okay, so section 1, the complexity trap. Before we get to the easy part, we've got to talk about the problem. And according to Collins, it's a big one. He basically says the entire financial world is designed to be confusing, on purpose.
Yeah, this isn't some accident. It's a business model, plain and simple. Think about it. The more complicated investing seems, the more you feel like you need to pay someone to handle it for you. It's a system designed to make them rich, not you.
And it often starts with something that looks totally harmless. Take this number, 2%. That's a pretty common annual fee for a lot of investment funds. You know, it sounds so small, right? But this is where the trap begins. Because that tiny little fee, well, it doesn't just sit there. It compounds against you year after year. Over, say, 30 years, that 2% could quietly siphon off over $250,000 from your money. It's a huge hidden cost that just eats away at your returns. So you're paying all this money, and for what? For these experts to beat the market for you? Well, here's the kicker. Study after study shows that something like 90% of professional money managers, the guys in the fancy suits, they actually fail to beat the market. You're literally paying more to get worse results. It's crazy when you think about it. Okay, so if that whole complex path is a trap, what's the way out? This brings us to section 2, the simple one fund solution. And believe me, Collins's idea is so simple, it's almost elegant. His whole idea boils down to this fantastic quote: "Stop trying to find the needle in the haystack. Just buy the whole haystack." It's a total mindset shift. Instead of wasting all your energy trying to pick the one winning company, just own all of them. You're not betting on a single stock, you're betting on the long-term growth of the entire American economy. And the tool you use to buy that haystack? It's called a total stock market index fund. The most famous one, and the one Collins talks about, is Vanguard's VTSAX. Basically, it's a single investment that automatically buys you a tiny piece of pretty much every public company in the US. So with one click, you own a little bit of Apple, a little bit of Microsoft, a little bit of everything. You get all their growth all at once. And this is where the magic really happens. Just look at the difference in fees. That actively managed fund is charging you 1 or 2%. VTSAX, it's something like 0.03%. That's practically nothing. It means all that money you were giving to the fund manager is now staying in your account, working for you. This is the absolute key to the whole thing. All right, so the strategy is dead simple, right? So why isn't everyone doing this? Well, that brings us to section 3, your own worst enemy. Because according to Collins, the biggest thing standing in your way isn't Wall Street. Nope, it's the person staring back at you in the mirror. This chart shows it perfectly. There's this thing called the behavior gap. Over time, the stock market might return, say, 10%. But the average investor, they only get something like 4%. Why? Because our emotions get in the way. We get excited when things are going up, so we buy high. And we panic when things go down, so we sell low. It's the exact opposite of what you should do. And this is why Collins says a so-so strategy that you can actually stick with is way better than some perfect strategy you'll ditch the second things get scary. The beauty of this simple path is that it's easy to stick with. It helps you build the discipline to just tune out the noise and let your money do its thing. It all comes down to a complete mindset shift. You have to stop thinking of a market crash as a disaster. Instead, you have to see it for what it is, a sale. Stocks are on sale. When everyone else is running for the exits, that's your cue to be a buyer. It's a huge opportunity. Okay, so we have the strategy, we get the psychology, now let's put it all together. Section 4, your path to freedom. This is where we turn the ideas into an actual plan. Collins has this very memorable term for the goal here. He calls it FU money. And look, it's not about being flashy or buying a yacht. It's about freedom. It's having enough money in the bank that you can make choices based on what you want, not what you have to do to pay the bills. You can quit that job you hate. You can take that risk. You are in control.
So how much do you need? Well, he gives us a super simple way to figure that out. First, you calculate what you spend in a year. Then you just multiply that number by 25. And that's it. That's your number. So if your life costs, say, 40 grand a year, you need $1 million invested. That's your freedom number.
Really, this whole thing just comes down to a few simple rules. You want to put your investments on autopilot so you don't even have to think about it. You learn to love it when the market gets shaky because that's your chance to buy more. You completely ignore the crazy headlines on the news. And the biggest one of all, you just stay the course for decades. At the end of the day, this isn't some get-rich-quick scheme. It's a get-wealthy, slow plan, but it's a plan that's been proven to work. It's powerful, anyone can do it, and it really just leaves you with one last question to think about.